Welcome back. Barely 2 weeks after President Bola Tinubu spoke about a need to unify Nigeria's foreign exchange, the Central Bank of Nigeria appears to have instituted a float of the Naira. Now, what this means is that the CBN has moved away from a fixed foreign policy and is losing control of rates in what can be referred to as a managed float. For years, Nigeria has maintained a tightly controlled exchange rate, even as the country's foreign reserve continued to dip. The CBN's decision to float the currency was hailed by the organized private sector and economists who said that the move would unify the country's multiple exchange rates and bring sanity to the FX market. Joining us this morning to break it down is policy and financial analyst Bolahon Olojide. Good morning and thank you very much for joining us.
Yeah, good morning. Nice to be here.
All right, so now we're talking about the CBN floating the Naira, which is a conversation that flooded social media yesterday. It's not the first time this has happened. If you recall, this happened exactly 7 years ago in June 2016, if I remember correctly. But we've seen that happen before. We see it now. Is there any difference? Are you excited about it?
I am excited because I believe from a policy direction perspective, this is where we need to go. I got a little bit shocked though that it happened that fast. So I have a little bit of concern, but on a larger scale, this is the right policy direction. So I'm excited.
I mean, there have been calls for this for the longest time. But, one thing I'd like us to do this morning is to take away the technicalities of this conversation and try and break it down exactly as easy and understandable as possible. So we're talking about floating the market. How would you break this down to someone who has no idea what this means?
Okay, what we have been doing hitherto is the CBN had capped a rate at a particular level. So for 460, let's use the 460 official rate, and a scenario in which we have 460 in the official rate and 750 in the market. Now, when you cap the rate like the CBN did, and people approach the CBN and say, I need dollars, but CBN is unable to provide the dollars, people start to look elsewhere for where they can get the dollars. When you go to those other markets, you find out that you cannot get that price that has been fixed by CBN. So people put a premium on it. What has happened over the years is that the gap between the official rate and the other rates, especially the parallel market rate, are continued to widen and widen and widen because there is so much demand, there is very little supply.
Great. Now, there's so much demand but little supply. Some of the criticism, we'll come into your concerns about this, but some of the criticisms, or one of the criticisms I've heard, would be that we maybe are putting the horse or the cart
before the horse.
Yeah, exactly. So you've talked about demand, but there's a lack of access to as much FX as we need. Some people make reference to 2016 when it seemed that what was done was that about $4 billion was being injected into the economy to ensure that it's met up with pent-up demand. So is that something that maybe should have been done this time? Should we have seen a massive injection of FX into the economy before the floating happened? That's one of the criticisms I've seen. Is that something you agree with?
Yeah, you're referring to the supply side of things, that we have not grown the supply side of things that we might run into the problem. You see, when you remove the lead, of course, it is true that we have not perfectly addressed the supply side of things. But there is also an effect that will help us with that supply. And I will give you an instance. When you do what we have done, you improve the liquidity in that system. There are certain investors that have been looking into the Nigerian market and will want to come there. But they are scared that when I bring my money here, because of the poor liquidity, I may not be able to get out. Of course, we all know what has been going on with IATA for a while.
Yes.
So those categories of investors are going to feel more comfortable coming into a market now where there is what you call willing buyer, willing seller. I don't have to go and queue at one particular window waiting for 460 because the rate in the market is relatively about the same. Now, there will always be some marginal differences, but not the kind of 300 arbitrage opportunity that we have created before now. So those kind of investors will also help to boost the supply side of things. At the same time, if you look at the policy document, there's a policy document. That policy document, it seems as if the approach of the president is to say, we will be doing all this supply management issue along the line. So he wants to continue to rev up on our oil production to ensure that we continue to earn foreign exchange from that. And several other things he has been asking about what is actually our reserve. How much do we need to do to meet up with certain obligations that we need to meet up with. So it seems as if rather than wait and say I'm waiting for that day when I will have enough supply of dollars to do this. No, let's do everything at the same time.
Great. Yeah. Okay, let's bring in Osage into the conversation as well and get his thoughts on this. I'm sure that he also would like to ask some questions.
Yeah, I mean, I still want to talk, a little bit about the fears that people have. There's, of course, those, from the business angle, from the investment, like you've just mentioned, that investors are going to be more willing to come into the market. The aviation sector also, you've also remembered that, for a long time, they've struggled with repatriating their funds out of Nigeria, and so can you also address other fears that people have, that, yes, it might seem like a, distant thing to do, but there would be some suffering for a little while. Nobody knows how long that suffering would last. Currently, the dollar is as high as, I think, 655, according to the newspapers this morning. Nobody knows how long it would last before it then starts to maybe reduce in value and balance out somewhere, closer to 400, maybe even, lower than that. So will the time of suffering, be brief, or will it be, for months or years even?
It will depend on how we approach it. Like you rightly observed, there will be some pinches here and there. We're still dealing with subsidy removal. Now this has come. One of the things that will happen on the CBN window is that the rates will increase at that I&E window, while the rates at the parallel market will come down and they will meet somewhere in the middle. Now, that increase in rate also has implication for inflation. So, and because we are heavily reliant on importation in this country, from raw materials to finished product and outcome what may, we will feel that pinch. So by the time we see the June numbers for inflation, the chances are high that the inflation will have inched up by virtue of two factors. Some of the subsidy issues will hit that inflation numbers, and then this increase in the official exchange rate will also hit the June number. So we are likely to see inflationary issues. But then, the measures being put in place, because like I like to see a plan, and I've seen something that looks like a plan. If that is implemented, apart from what I just said, there's also possibility for even debt obligation that are in dollars.
Right.
Because there is now more Naira that you require to meet your debt obligations that are in dollars. So for people who have debt obligations that are in dollars, there is a little problem for them. And especially when their revenue is in Naira. If you have a Naira revenue and you have an obligation in dollars, you will now need more Naira to meet that obligation. And that includes the government too, because government government has dollar obligations. But we cannot, because of all these pains and pines, not move ahead in the right policy direction. This is the right policy direction. It is how we now manage or moderate the impact that we should be talking about. It's the same thing almost as a fuel subsidy.
So you can't give Nigerians an average time frame.
It's difficult.
Yeah, because if we're talking about currently 655, right? And we expect that the black market rate will drop and made it somewhere around there. It's still a lot higher than the 460 or 420 that it used to be. And Nigeria is going to get used to it being above 600 now as a regular rate. Are they going to expect that maybe before Christmas it would have dropped to 500? Based on demand and supply. Maybe sometime in 2024. I mean, is there an idea, of what time frame we're looking at?
I won't be able to put a time frame to it. But there is one thing I must mention. I think we're a bit fixated on rate as opposed to stability of rate. Exchange rate and exchange rate stability are two different things. Of course, by virtue of the rate, there will be some sufferings. We can all agree on that. Some price implications. But what is much more important than the absolute number of your currency that exchange with the dollar is the stability of that rate. So as if you check South Korean won today, for example, the Naira is stronger than South Korean won. About 2 times as strong as the South Korean won. Does it mean that the economy of Nigeria is twice as strong as South Korea? There's no bonus now. We don't go close. So the stability in that rate, I don't want something to be 40 Naira today and it is 45 Naira 6 months after and it is 60 Naira the next month. That stability is even much more important. And you see, liquidity in the market will help us with issues of stability in that market.
It's interesting that you talk about stability. Now, how well can we guarantee that this stability is something that we'll see, especially because now that the CBN has, caused the Naira to float? Experts and analysts are saying that the results that we're expecting will only be achieved if the CBN does not interrupt the process. Yes. And that, what we might see now would be that in another few weeks, CBN interferes. And what might happen is we might see the Naira shoot up to, we can see it fall so low to get to as high as 2,000 Naira to the dollar. So are there guarantees that the Central Bank of Nigeria will not interrupt this process?
There are no guarantees. There are no guarantees. But if you look at the pronouncements as it is today, it is as if the government is interested in living into the forces of market. In that case, no intervention. But the worry will be, what happens if the slide becomes intolerable? Will the government be forced to say, okay, it is 600, I prefer that it will be around 550. Can I intervene and make it, But the government at the same time must be careful so that you are not flip-flopping. You are not the one that says, I want it to float, and then some months down the lane, you went back and started to intervene. Rather, what the government should work on is the issue of supply. How to ensure that the market supply can improve by itself, by forces of nature, by businesses, by trade, by all the other interactions that bring foreign exchange into the market. That would be a better approach than trying to go and start capping anything all over again.
Yeah, Mr. Olojede, can we also, help break down what the, day-to-day realities might be for the average Nigerian with regards to the price of goods and services and also the price of, doing business? For people who pay their rent, for example, in dollars, if you used to pay $1,000 a month, as your rent, now you're probably paying 1,600, 1,900, for example. That would also then translate to, of course, an increase in the price of the services that they're offering. So is this going to be the reality for Nigerians in the, the long run, maybe for the next couple of months until things settle? That's one. And then second, what prevented Godwin Emefiele from doing this? If everyone is agreeing that this is the right step to take, then how come Godwin Emefiele never saw it or never just was bold enough to do it?
Well, people who are paying rent in dollars, our intervention should not be to protect that segment of the market. I think the kind of intervention we need should focus on businesses and also individuals, especially at the lowest rung of the ladder. It's an opportunity for us to also do certain import substitution and put communication, strong communication behind it. Nigerians have a strong appetite for consuming the foreign stuff. So drive local consumption kind of a campaign around. But don't also forget that part of the inflationary pressure that we suffer has to do with food inflation. If we can do something in that space, which makes food available to the lowest rung of the ladder, and they don't even consume a lot of those imported stuff anyway. So whatever we can do for them in that bracket will help their case. So businesses and individuals at the lowest rung of the ladder should be our focus, in my opinion. The people who are paying rent in dollars, I even think that is illegal anyway.
Right.
But yes, those are not the people we want to bother about.
Okay. There are many layers to this. We certainly have to have you join us back again so we can dig in further into what this means for businesses, what this means for banks, because we've seen this happen in other countries where banks have leveraged on it. And, HSBC, for example, before their own issues, we've seen this happen, and what it means for fintechs. So we can't exhaust this conversation. We're hoping that we can have you come back again and you'd oblige us. Thank you so much for your time.
The pleasure is mine.